Hi and welcome back to Mr. Allred's 5 Minutes On. Today we're going to be talking about the concepts of revenue and profit. This is a concept that's covered in both A-levels, BTECs, GCSEs, CamTechs. It's a concept, two concepts that come up a lot. There's different levels of understanding. GCSE really it's all about what it is and how to calculate it, whereas A-level it's more looking about how we improve it and the importance of profit for an organisation and the difference really between profit and cash, which we'll touch on but talk about in a later video. So let's get cracking then. So revenue, what is revenue? Well, revenue is money taken from sales. It's the money taken from selling a product. So every time I make a sale, that's adding to my revenue. So often people will say, well, that's money that goes to the till. That's not technically the correct definition. It's any money from sales. So if I sell a product on credit sales, the moment that I sell that product, I agree that sale, even though I might not have received the money for that yet, it's still classed as revenue. So the moment I sell a product on credit, it's classed as revenue. So essentially, I need revenue, and I need revenue to cover my running costs, to cover that revenue expenditure. I need revenue coming in because revenue is part of my cash. It enables me to be more liquid and enables me to cover my bills in the short run. It's also really, really essential to make profit. The more revenue I make, the more potential profit I'm going to have in the long run. And they're intrinsically linked, and you'll see that when we look at the formulas in just a second. Revenue is a term that often might get used in your exam, but also you need to get familiar with the word turnover and the word income, both of which mean revenue, that it can be the same thing. So in terms of revenue then, the calculation for that is price times quantity sold. So price is quite obvious. It's how much I sell my product for. However, often in organizations, I don't just sell one product, I sell a range of products. So what we need to look at is the average price in some questions. So in some questions, especially at A-level or BTEC level 3 or CamTech level 3, you'll have to look at the average price of a product. Often it won't give you just the selling price of the product, and times by the quantity sold. Now, sometimes for manufacturing businesses, this will be output. It won't just be the physical amount they're selling, it's how much they're making. So it'll be asking you for anticipated revenue and those sort of things based on how many they're making. So it might be output as well. So those are two variances on that revenue calculation. So profit then, well, profit is the reward or byproduct for operating a business. If I'm an entrepreneur, I take a risk, I set up an organization, and my reward for that is profit. And that's what profit is. Now, profit is calculated by revenue minus total costs. It's important to note here that this doesn't include capital expenditure. This doesn't include expenditure on non-current assets. It doesn't include expenditure on vehicles and on buildings and on fixtures and fittings. That's accounted for elsewhere in my financial statements, and we'll look at that again in a later video. This really is to look at how much money I'm making based on the selling of my products and how much profit I'm making based on that. So let's have a look at the importance of profit then. Well, profit's really, really important for long-term survival. If I don't have profit in the long term, what's the point of having a business? What's the point in being there? Now, people argue, well, you need profit in the short term. That's not necessarily true. What I need in the short term is cash. I need cash to be able to spend on my costs, on my fixed costs, my variable costs, to keep myself running. Profit, therefore, is not actually important in the short run. In the long run, it's massively important. I need it for several reasons. One, it's a really important source of finance. Often lots of businesses use retained profit. They don't keep all that. They don't take out the business. They keep it in accounts. They use retained profit for growth, for rainy day money. So when I'm struggling, we're currently in the middle of the pandemic and businesses are shut, they'll be dipping into that retained profit to ensure that they keep on running and ensure continuity of business while revenues dip. In addition to this, there's a massive measure of success. Profit is one of the measures that we use to measure how successful a business is. It's not the only measure, but it is a really important one, and it allows us to compare business to business, because at the end of the day, profit is how much money has been made based on their business operations. So therefore, it's an easy comparable measure between business and business, whether they're labor intensive or capital intensive. It's a good way to compare business to business. More than that, it's an incentive, it's a motivator, especially for a business owner. That's the point of business. It's going to keep them going and drive them forward to be better at in the business. Now, when we look at trying to improve profit, really we just go back to that basic formula: revenue minus total costs. Either we've got to increase revenue or we've got to decrease costs, or ideally both. So when we're looking at improving profit, it's going to be things that does that. So if we're looking at increasing revenue, it's going to be increased advertising. Yes, there's an additional cost. Yes, there's a risk, but they are positively correlated. Usually if I advertise more, I will sell more. Or I can increase or decrease my price. That's going to help me to sell more, or potentially might annoy my customers and I might sell less. This is really going to depend on this concept of price elasticity of demand, how responsive demand is to that change in price. In addition to that, if I want to get my costs down, one of the major things to do is look for cheaper suppliers. That's going to help me, especially if I'm a big business. I can start benefiting from economies of scale. However, that might annoy my customers because my quality might not be as good as it used to be. The other thing I can do is look at staffing. Staffing is usually a major cost for an organization. I can try and get rid of some through natural wastage, just not replacing them when they leave, or redundancy, or I can start looking at more flexible ways of working. So I can look at more temporary workers, part-time workers, flexible working, 0-hour contracts, these things that enable me to keep that down and I have staff when I need them at my bumper times of the year. This has been Mr. Allred's 5 minutes on. Please like the video and please subscribe to the channel.